So what I'm trying to say is that anything above, I mean, between your between the last low, the current low, and then the current high, or how should I put that word? That where, because this is the present low that we have right now. This is our our new low that we have. So before this low, there was a low, okay, which is this one. And then before this high, there was a high before. So that means it is this high. Okay. So that is why we use this one as an example. So when you are in your chart, when you're on your chart, your job is to have, let's say, you identify your market structure. Higher high, higher low. This is the common higher low that we know. And then higher high, higher low. Sometimes we can have this, we can have this, we can have this, we can have this, we can have this. What should we call this market structure here?
Uptrend.
Okay. Thank you. So now, your focus should be between this current low, and then this current high, to mark your Fibonacci, to mark your Fibonacci level. Okay. Let's say this is the low and high that we have currently. Now, you want to take a buy, but you don't know exactly where to take a buy from.
A buy.
So, what you do is, you take your Fibonacci level, you measure from this bottom, from this current bottom, and then to this current high. So, according to the rules of this Fibonacci, it is said anything between above this 50% upward, it is counted as a expensive level. And then anything below from this 0.5 zone, it is counted as a discount level. So, but in this Fibonacci, we use between 50 and then 0.618. That is our golden zone.
Golden zone.
Okay. So the same thing that what we have right here. This one, it only have two options here, because this is another type of Fibonacci that we have. This is another type of Fibonacci. So this one, I'm saying it's the same thing, but it's just that this one is is just to show us a discount and premium level. Okay. So in this Fibonacci right now, our focus, if you want to take your trade, depends at what wave, which wave, because this thing work with wave pattern. Remember we talk about the wave principle. So this also work with wave pattern. So that's your wave. When you already understand your wave, it is what is going to tell you whether the next retracement is going to happen and turn back from here, from this 0.6, I mean 0.382 and continue going up, or it's going to touch your 50% and turn back up, or it's going to touch your 0.618 and then reverse, go back up. I don't know if that point is getting clear.
Very, very clear. I get it.
Okay. So we use this.
We have to, sorry, we have.
Yeah.
Because we have two golden options there. Is either the 0.5 or the 0.6, right?
Exactly.
It can make a retracement from 0.5, or you can wait for the.
Your voice is breaking.
It's breaking.
Yeah, I did not even get the last word that you said. The last one.
I see. For example, we have two golden.
The 50.
Yeah, the 50.
0.6. Yeah.
Is 0.6. If it doesn't make a retracement from the 0.6, we can wait for it from 0.5.
Exactly. Before.
Okay.
Is that either between 0.5 or 0.6.
Okay.
So sometimes market can flash. It can flash lower.
Lower more.
Okay. It can flash just lower with a rejection candle. Okay. And then what happened? You just start seeing rejection. The thing will just turn. We start turning bullish candle, either bearish from bearish to bullish, or from bullish to bearish, depending the market's direction that you are focusing on. Okay. So now, but this thing is going to determine at what wave this is happening. You know, in the wave in the wave principle, we have a 5 wave. We have this is our first wave 1,
First wave.
and then we have 2, and then we have 3, which is the longest one, and then we have 4. This fourth wave normally it is the one that is going to determine either it's going to touch your 50% Fibonacci or it's going to touch your 0.6%. Most of the time, this wave 4, it usually ended at 0.3. It usually ends at 0.3. Let me explain to you. Now, this is our first wave 1. Okay. 2. Then 3. Remember, always remember, whenever either this thing it happen on the lower time frame or on the higher time on your higher time frame, always remember the structure between that market. That is what you are going to start counting as your wave. I'm going to show everything to you right now. So inside this third wave is always the longest. It is always the longest. It's always the longest. When you see a chart like this, you should know that the fourth wave, then when you want to draw your Fibonacci level, you draw it from here. For example, you draw it from here. Maybe you don't know where you are going to buy, and then you draw it to this high. Normally, this fourth wave normally make a U-turn right from here. Okay, because according to the Fibonacci and according to the wave principle, it is explained that the wave 4, it will never retrace. It will never retrace 50% of wave 3. If you want to retrace, the wave 4 want to retrace, normally retrace 40, 45. If you want to do the maximum, it is 50, but it never touch the 50. Normally, it cannot go beyond, cannot retrace half of wave 3. Okay, so most of the time, this wave 4 usually ended on this 0.3. But normally, our golden zone on Fibonacci is 50%, 0.6 level. So now, let's draw this one now. Let me show you another thing now. Let's use this one, this wave 1, and then to wave 2. And you tell us where the thing has touched. You can see now. You see now, I did not measure it before I draw that line. You can see now that this one, it touched right on the 60 before going back up. You see? But when I draw this one, when I draw the 2 to 3, you see that the 4, it did not even go to that 50. Before what? Before another impulsive move to the upside happen. So now, what is my point here is that when you have your chart, when you are on your chart, let me go back to the previous chart, the gold chart. Let me use this one exactly. Now, this is where I wanted to explain to you right now. From here now, market has been in a downtrend. It has from here market changed, going to the upside, going to the uptrend. Okay. Let's say if you use this one from here, this is our uptrend. From here, this is where our uptrend started from. Okay. Now, if I may write, this is our wave 1 and wave 2. And then all this one like this is wave 3. This is wave 3. All this one is just like wave 3. And then this one is going to be our wave 4. And then now, definitely, we should be waiting for wave 5 from here to the upside. That is why, because wave 4, it is the one that usually, it is normally print pattern. It usually come with pattern. It can come in different pattern. It can come with it has a zigzag. It had zigzag. Usually, it's the one that usually print like making zigzag. It will not have a direction. It will just be making zigzag up and down, come back. You understand? That's what they mean by zigzag. So this type of, when market is printing this type of zigzag, that should be telling you that this is like wave 4. That is the 4th wave that is printing.
The 4th wave, okay.
Wave 3 will never print pattern. Neither the pattern that wave 3 can print, it can only be a channel. We have what we call channel. When we have market going to the upside like this, and then like this direction, which means that market will be like this inside this trend like this.
Inside that trend.
Okay, so this one is, we usually call it, this is what we call channel. Okay, this is what we call channel. So wave 3 can do this. You can do this. So you can see what we have right here between here. What happened here? The same thing. That is what usually happens on wave 3. It's the longest one. We never make. We just go straight to the upside with no too much deep retracement. So, but when it gets to a certain level, like what happened right now here, this is usually be with 4th wave. So the 4th wave is the one that usually prints such pattern, like a triangular pattern, wedge pattern, all these bats. Usually it has bat. We have what we call bat. We have what we call butterfly. It is wave 4. Okay, so when you see market like that, you should know that. Now, my point is that, so now when you want to draw your Fibonacci level right now, you draw from this level. From this low, this is where the low started from. Then you draw it to the upside. So did what that we have been discussing, did it coincide or it did not coincide with what I explained to you?
Of course it was.
Let's start this one. So you can see what I just said. You see that if I'm right, if I am right, you see that 0.3%, that is where this thing is sitting right now. So definitely, if we should be waiting for this market right now. So what the worst this gold chart can do, it is to come here again, test this level again, and then go back. This one is going to be our 5th wave. This is going to be our 5th wave. And then when market reach to 5th wave again, there is going to start printing another type of pattern. Market will start printing another type of pattern. Now from here, now we're going to have A, B, C, ABC pattern. From ABC, sometimes we can have D. If you have D, sometimes we usually have E. So that E sometimes it's not, this does not really, it's not often, but sometimes market print it. So when market bring this type of pattern, then we should be expecting either market will go down or market will go back up and start counting another one again. So, but normally ABC is usually what market usually do. A and then B consolidation, and then A, B, C, and then either continue to the downside or continue to the upside. Okay, so this is how wave is done. So now what I want to say, another thing is that wave can happen in 1 hour, it can happen in 2 hours. Now this one I just used 4 hour time frame to do this analysis right now. If you go to your 1 hour time frame, we are still going to have another sub wave. That is what we call the sub wave. Okay, your sub wave inside 1 hour again is still going to tell you have 1, 2, 3, 4, 5 again. You are going to have another 1, 2, 3, 4, 5 inside that. This 4 hours we just have, we are still going to have inside 1 hour. We are going to have another wave again. So once you already know how to count, how to use this thing like that, then you should know whenever you draw your Fibonacci. That is why this Fibonacci is very important. So when you draw your Fibonacci and you see that instead of you'll be waiting for 50%, because you'll be waiting for this 50% of 61 or 61%, and then fortunately you see that the market did not come there. You just see that the market continue going up. Now you now be saying, maybe then tell me say this thing like this is like this. No, you should be aware. That's why I have to explain to you like that. So that you should be aware that whenever you draw a Fibonacci and then the market is unable to come to that your 50%, then you should know that maybe the market just ended up on this 0.30 and then go back up. Then that should tell you that that is going to be the fourth wave. But this thing takes time to understand. Me too, and I'm speaking currently, I'm not too perfect on this Fibonacci yet. I mean, on this wave pattern, wave theory. But I just trade with my price action. I trade with my price action. That is the only thing I understand the most. So, but whenever I draw my Fibonacci and I see that the market is unable to continue going down, so I already know that okay, this is going to be probably that is my fourth wave that is printing. Okay. So that is why now you know how to draw your Fibonacci. So next time when you draw your Fibonacci and then you see the market come back, let's look for another scenario. Let me delete this one. Let me give you another one scenario now. Now, let me take this, let me delete this one, take another one. Now, let's use from this bottom to this high. Now, let's say market just started moving from here now. It created this high. Maybe from here, maybe you don't know, maybe market is going to go down or it's going to go up. But as you start seeing market is making rejection, is returning back down, there you want to take your Fibonacci. The moment that you see market is making return from that level, market got to that level and it started to print red candle. Then now you take your Fibonacci, you draw it from this low, then you draw it to that high. Tell me, can you see what I explained or no? You see that this is 0.618. Boom. As it touched there, what happened?
You went back.
It went back up. Okay. So this is how you use your Fibonacci. Remember, your current high, that high, and then the previous low. When market move up, the first time the market move up, forget about the previous price. When market create a high like this, then now you don't want to enter trade when market is creating a high. You need to wait for a retracement. That is in a discount level. Then now, but for you to identify that discount, you need to wait for candle to start printing red. Like maybe you want to come down, So that one is going to tell you, okay, probably market want to make a retracement. So when you want to make that retracement, that is now you want to take your Fibonacci right from here now. This is candles that are printing, just like what happened, what we have here. You take your Fibonacci, you draw from this level to this high. Then you should be waiting now. Okay, this is the fourth, because this one is going to be the first wave. It's going to be the first wave. Remember, either you are in an uptrend or you're in a downtrend. So when you are in a downtrend, you draw your Fibonacci from the top. When the market is going down, that means you draw your Fibonacci from this top to the down. Okay, remember that. When market is going up, you start drawing from the bottom.
Drawing from the bottom. Yeah.
I hope you understand the difference.
I'm with you.
Yeah. So now, when market first create that leg now, then now you should be waiting. You should be waiting for, okay, this is going to be your first wave. Then you should be waiting for, is either 50% or 61%. Most of the time, this leg usually provide fair value gap or another block. Sometimes it might be other block or it may not be other block, but there will always be something like a fair value gap here. Then you are going to mark this level. Oh, sorry. You are going to mark it out. Identify the place. That is your golden zone. That time now you can now delete this Fibonacci from your screen. Then now, yeah, now you want to be waiting for the market from that level. So when market come to that level, you want to set your stop, and then times 2 or times 3 times 4, depends the market condition. You set it, and then when market touch that zone, you are going to see the reaction. But remember, sometimes if there's another block here that is very valid, you know, for your other block to be valid, you need a fair value gap, and then you need a last bearish candle, or it can be bearish, it can be bullish here. Before that impulsive move to the upside, you need other block here. So if there's other block, sometimes market can flash. It can flash to that low a little, just to the top of the candle. Let's say we have a last candle here that printed. Let's say this was the last candle that was printed before this big candle printed. Then normally there usually be a rejection like this, either long or short. So sometimes market can flash lower a little bit like this to at least to 50%, almost to this other block, fair value gap, other block. You understand? And the market will reject, go back. But normally markets have to, it cannot retrace more than, it cannot retrace up to 75%. When market want to retrace the wave 1, you can never retrace 75% of this wave 1. I don't know if you understand what I'm saying, the wave 1.
Yeah, I'm mixing.
This is your wave 1. Where the market, if the market start move up like this is going to be your 1. Up here is going to be your 1. And then when market come back here, this is going to be your 2. So from here now, this is where you want to be waiting for. When you already understand, identify your Fibonacci with your Fibonacci. Now you know, okay, it's either here or you start seeing reaction from the 50%. Above here or below here. When you see that reaction, market will go. Simple. Now, if you use another on the lower time frame, on the downtrend, the same thing. When market want to go, it will go back up. From here, it will go touch this 50 or 60, and the market will return down. So when it reach to wave 3, this one, after this one, now market usually move very aggressive. Market will go all the way up. It can go continue going up. Then now, before we now making the 4th wave, the 4th wave like this, accumulating. Okay, that's when a lot of people can get confused. They start getting confused that what is happening. Is he going to sell? Is he going to buy? Is he going to sell? Is he going to buy? That is what is happening right now here. Now, for the second wave, You can use this thing to make, you can just draw it in any market. Market is doing this one, is doing this one. When you draw this one now from this low, we draw this low to this low to this high. Now, if you draw this one, this low to this high again, tell me, does it work or not work?
It's very clear. I wanted to ask that, is it compulsory you have to take it from that side? But time for the second example. It works.
So you can take it for anyone like this. You see that when we draw, hold on, my computer is loading. I don't know why it's fixed like that. Okay, it's back. You see that when we draw this one from here, I don't know where we draw it that time. From here, that time, and to this top, you see that this one is sitting right on this yellow line. But all the one that we have drawn now from this level to this level, you see how it's aligned with that 50% and 61%. So that is how we use Fibonacci level. And then that is how you identify your market. When market reach here, is making reaction, you want to wait for that's why understanding candle also important. So when market get to that level, you want to wait for that candlestick. That your favorite candlestick that tells you, okay, yes, it's like market want to buy from here or market want to sell. One, I have my support level right here. You can see I have my support from a long time. That support is there. Second, I already identified the market is in an uptrend. Then third, I use my Fibonacci level and the market is currently right there now. It's telling me like market still want to buy. Now, for me to finally kill them finish, I have my favorite candle. Right, market is sitting right on my support level. And then my candle that I usually use most of the time is like morning star candle or hammer candle. And now I have my hammer candle right here. So you can see I have the hammer candle. Now,
that confirm it.
Yeah, exactly. So when I see this hammer candle, I need to take my time a little bit to see if market want to continue. Let's say I give it time again for this candle to even print. This candle come out, and then I go down to my 30-minute time frame, and then what? I take my trade. So tell me, what I have make money here?
If you see what I'm calculating in my head, like if you hit this one from that 0.5 zone, just have the patience. If you have, just hit like kai.
So
you'll be laughing at the end of the day.
You'll be laughing at the end of the day. So that is how you do it. So that's why most of the time, patience is very matter in trading. Patience is very matter. You need to be patient. You understand? So you do this thing, this same thing that you do today, tomorrow you repeat the same thing. You repeat the same thing. You don't want to.
No matter you'll be seeing something every day.
Something every day, but that thing that you know that this thing worked for you yesterday, that is the one that you need to keep repeating. If you don't see, if the thing is not aligned with your thing, you forget about it. So
just forget about it.
Sometimes when market just go all the way down here, go make the same low with this one, wait for the market, let the market to do its things. Don't force it. You know that something is not right. You should know something is not going right. So you just leave the market. For now, give it time. Maybe you can go back or you can continue. That means maybe likely market wants to change direction or direction is not correct. So you just leave it. That is that one now you are not trading. So that is why sometimes you need to be disciplined. Okay. So this is how that is how we use Fibonacci. Now, if you want to set it now, if you want to set your Fibonacci, there is a lot of levels on this Fibonacci. A lot of level. As a first person, if you open your Fibonacci, it's going to give you a lot of color. It's going to give you a lot of lines, a lot of information. So you need to just need to select the one that you know is working, like this one of my home. You just need to set it like that. You need to set it like that. First thing, let me show you how to do it. Okay, let me take a quick look at this other. I will do those things later. Now, if you draw it, I go to the setting.
Where do you click? I'm coming here.
You know how to take Fibonacci. You know where it is now.
Yeah, I know where it is. I'm just trying to see where do you
Okay,
click.
go to settings. You click on this
I've clicked
settings.
it.
When you click on it, all these things will come. Most of the time, you see now I only have 5 that is activated. 1, 2, 3, 4, 5. Okay, there is a two zones, two level to your right and to your left. So you see, this is my 50. This is my 50% Fibonacci.
Which the
This is the
I
one.
don't have the two zone. I only have the one zone.
No, you need to. Is everything is there. So you check on your screen very well. When you enter to the settings, go to your setting. Maybe you will share your
Yeah,
screen now.
I'm there already. I'm using my phone to follow you.
Okay, no, on the phone it's going to complicate for you. You will share your laptop. I think you have your laptop now that you are sharing before.
I'm using my laptop now.
Yeah, I will stop sharing my screen, so you share your laptop. So I will direct you. Okay, let me even stop right now. Okay, let me stop sharing. Then you stop sharing your own. Okay, now share. You can share now. All right, you can see your screen now. Enter your trading view.
Can you see anything?
Yeah, I can see the screen now. You go to the trading view. Exactly. Now, pick your Fibonacci level and put it on your screen. You stop sharing again, eh?
Eh, Is this still sharing?
It's not sharing now. You stop it again. Click on the settings. No, don't all this thing that is popping up on your screen. There's still a lot of things. You need to always deactivate your toggle off the all this section, this thing. I said it most of the time too when you have class, so that your clear, you need to have clear screen. Your screen has to be always clean. So now click on the double click the Fibonacci now. Double click it like that. Close this your watch list. Are you hearing me? Close your watch list. Close the watch list. I can't hear you. Your voice is breaking. Close this your watch list. I can't hear what you are saying, but just close the watch list first. Your watch list. Your watch list is the all the
Close them all.
no. Just close. Close is not. It's not deleting. Not deleting your watch list. Click on that book that is showing to your right, where this thing is written leaf above your screen to the right. That thing like a book.
Abu.
Carry your mouse because your mouse is still on the same place. Carry your mouse, go to your right side. Yes. Now double click your Fibonacci now. Double click it.
Yeah, we are there now.
Now, toggle off from your right. Those lines from your right, toggle off 0.2. 0.2 to your right. That's 0.2. Toggle it off. To your right, to your right, to your right. Toggle to your right. That is the toggle. It's not inside, it's not inside the box. No, when I say toggle it off, you see that that thing is having mark now. That mark, the mark on the white is the one that is what they mean by toggle off. Yes. Then now 0.7.
Let me connect with this my distance so that I can hear you. Let me connect with my. I'm finding it. Okay.
0.7. And then 0.6. I mean, sorry. 1.6. 1.6 toggle it off. And then the next one, 3.6 off. Then now to your left now, go to your left now. And then you start from the bottom. That 4.2, remove it. Disactivate it, And then the next one, 2.6. Now these are the one that you need now. 1, 2, 3, 4. That is your 0 level. That is your 0 level. You have 0.3. Go back inside that thing. Go back. We have not finished yet.
Yeah.
Now you have 0.382. You have 0.618, and then that is 100%. The next one, that one, the one is 100%.
Okay.
Yeah. So now, what next now is the background color. The background color.
Okay.
Go to the no, it's not that one. Go down. Stroke go down.
Okay, this one.
That background color. You need to deactivate it. Toggle it off. Then now go to your screen now. Click on OK. Click OK. Because if you don't click OK, all those things can still go back there. You see now no background. Now what is we need to do now is that those numbers, the number, go back there again. You have deleted it.
Yeah.
Now go back to your settings now. Now the numbers should be, go back, go down again. The price levels, label, click on the text, go down again. Now the text, that's the center. Leave it, but click on center. That's center. Put it to your, let it to be to your right. You can put it to your left or right. It's anywhere you know that it's best fit for you. And then middle, put it. I think middle is okay. In the middle is okay. And then the font size, the number, the bigger, it is very large. So you can reduce. If you have eye problem, then you can increase it to be larger. So that. For me, I always like it to be very small, because when it's too big on the screen, it looks very, very nasty. You understand?
I think the 12 is okay.
You see?
I guess the 12 is okay for now.
I can't really get it too clear, but anyway, if you like it on 12, it's okay. Then you can click on okay, let's go and check it again first now. If you want to reduce it, you can reduce it. You can always come there to reduce it. So you can see, you can see now. So those color too, if you want to reduce the color also, you can reduce it. Then I go back to setting again. Let me show you something now. There are a lot of things there. That thing, there's a lot of things there. A lot of numbers. It's too much there. Go down again. The percentage. Let it to show only percentage. Price. Switch off the price. And then enter to that level value. That values. Percent. Put it percent. And then go to the screen now. Click on OK. Always remember to click OK. And then let's see if I'm right. Is it like that? I think if it's not like that, I think 50%. No, it's on price. If you like it like that, my home, I think I don't have my own like that.
Okay.
Yeah, but if you like it
There
like
is
that,
something I want to correct. I don't know your own. I want it to be from left to right, but this one is always come from right to left.
it's the same thing because you draw it go down. You draw it from the. That's what I'm saying. That was what I was telling you.
From up to down.
Yeah. So
Okay.
when you draw it from the down to the upside, so it's going to look different. You can delete it and try it now. Delete it and try it from the down to the top to the upside.
How you are? Yeah.
You can see now. That's what I was telling you, that when market is in a downtrend, yeah, you should know that differences.
Yeah.
Okay. So when market is in an uptrend, this one is for the when market is going to the uptrend.
Uptrend. Yeah.
Yes. So when market is going to the downtrend, that means that is the way it was before. Yeah. So the 100% is going to be the upside. It's going to start from the up. When that is when market is going to the downside. That 100% is going to be from the top, and then the 0 is going to be down. Okay, you are joining this thing. I
joined. I want to move the speaker from the laptop so that it won't be.
Well, I say, hey, another person just joined, or what is happening?
No, I'm the one. I joined from my phone so that I can hear you because I was.
Yeah.
Yeah, I have to close them. Need to close them. So that I'll be using my phone. So
Wait.
let me share back.
Wait. Say wait.
No, the wait is for me to exit or I should join back.
Are you sure?
Yeah.
So
Join back now. To you to examine some things when I'm doing the. For now, I have to analyze my market very soon now because the market are closed against tomorrow.
yeah.
I don't have the for me to wake up early in the morning to do it. Oh, yeah, man, do.
Yeah, of course. Now it's here in the morning. Me too. Sometimes I do it. I do everything from in the night. So by the tomorrow I wake up, I will just
difficult.
trade. I will just trade in the morning. I already know where I'll be expecting markets.
Exactly. It's better like that.
Yeah.
Oh my God.
So
No, Ishan. No, I'm not sure.
that's it for today now.
Thank you very much. I really appreciate it. Allah.